Did you know that following the traditional 50-30-20 rule can actually hold you back from achieving true financial freedom? Not financial advice, but the numbers don't lie. The top 1% have been using a different wealth formula for years, and it's time you learned about it. On-screen text, 50% of people are stuck in financial limbo. And what I'm about to show you will change how you think about building wealth forever. In 2026, the financial landscape is more complex than ever. With the rise of new investment opportunities and the constant evolution of the economy, it's essential to stay ahead of the curve. The traditional 50-30-20 rule, which allocates 50% of your income towards necessities, 30% towards discretionary spending, and 20% towards saving and debt repayment, may not be the most effective strategy anymore. Let's explore why and what you can do instead. The 50-30-20 rule was first introduced in the 1970s and was based on the economic conditions of that time. However, the economy has changed significantly since then. With the rise of the gig economy, increased housing costs, and changing consumer behavior, the traditional rule no longer applies. But here's the part nobody talks about. The top 1% have been using a different approach, focusing on wealth creation rather than just saving and spending. According to a recent study, the top 1% of earners in the US have a net worth that is at least 40 times their income. This is because they focus on building wealth through investments, such as real estate and stocks, rather than just saving and spending. Let's look at some real data. For example, a study by Source found that investors who allocated 60% of their portfolio to stocks and 40% to bonds had a higher return on investment than those who follow the traditional 50-30-20 rule. Another example is the use of tax-advantaged accounts, such as 401k and IRA, to optimize wealth creation. By using these strategies, you can potentially increase your wealth by 20 to 30% per year. So, what can you do to start building wealth like the top 1%? First, it's essential to have a clear understanding of your financial goals and risk tolerance. Then, you can start allocating your income towards wealth-creating investments, such as stocks, real estate, and bonds. Remember, this is not financial advice, and it's essential to do your own research and consult with a financial advisor before making any investment decisions. By following these strategies and staying disciplined, you can potentially achieve financial freedom and join the ranks of the top 1%. Thanks for watching. If you want to learn more about building wealth and achieving financial freedom, be sure to subscribe to our channel and hit the notification bell. In our next video, we'll be discussing the top 5 investment strategies for 2026, and I'll be sharing some exclusive insights that you won't want to miss. The key to success is to start taking action now, so don't wait any longer, and let's get started on your path to financial freedom. And as you begin to build your wealth, you'll realize that the possibilities are endless, and that's when the real magic happens, and you start to think about how to optimize your portfolio for maximum returns, and that's when you'll want to consider tax loss harvesting, and